Ladies and gentlemen, good day and welcome to the UltraTech Cement Limited Q1 earnings conference call. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore reviewed in conjunction with the risk that the company faces. The company assumes no responsibility to publicly amend, modify, or reverse any forward-looking statement on the basis of any subsequent development, information, or events, or otherwise. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Atul Daga, Executive Director and CFO of the company. Thank you, and over to you, Mr. Daga.
Thank you. Good evening, ladies and gentlemen, and welcome to this call of UltraTech for our results for April-June quarter. I think I will focus on 3 issues today: demand, costs, and our growth plans. Demand is good. Costs, as you all know, have not been very good, and I don't know how things will pan out in future. And growth prospects, as we see, are very good. We are happy to see the cement consumption in this current quarter, the reported quarter, April-June quarter, continuing the momentum after a strong performance in Q4. Month after month, we saw improvement in demand in cement consumption. The good part about this cement cycle is that urban housing has picked up in the last few quarters. The unsold housing inventory is at its record low. RERA coming into effect, there has been a reduction in number of unorganized real estate players, clearing the path for time-bound completion of residential projects. The number of new project launches has also been on the rise, which will benefit cement, of course. Mind you, these are announcements in real estate projects. After the announcement of real estate projects, there is still lead time before cement actually starts consumption. Cement consumption actually starts on each project site. There is a negative impact on the purchasing power to invest in housing, but I believe demand is resilient. Large infrastructure projects like high-speed Mumbai-Ahmedabad train, coastal roads, Jewar Airport, Mumbai Airport, to name some of them, are leading to an overall growth in cement demand in the infrastructure space, with a lot of ancillary projects getting seeded, which generate employment, income generation, and of course housing growth. The government's thrust on infrastructure growth is very much there and most welcome. Prices have been good, but like anyone else, we would also want them to be better given the inflationary trend in costs. Now let me talk about the not so good news, which is input costs. Costs have been rising continuously. Fuel and energy costs have been a matter of concern for all players. Production costs have risen about 7% this quarter. The effect of rising costs have been mitigated by improvement in procurement prices, improvement in efficiency, and better planning. Everyone knows that China has a significant influence on most of the commodity prices. Good news is that China's domestic coal production hit a high of 395 million metric ton in March, before slipping to 362 million metric ton in April. The average monthly production is trending 12% higher year on year. However, I understand that China has cut import tariffs for all types of coal to 0 from May 1, 22 to March 23, as compared to the tariffs of 3% to 6% on imported coal, depending on its quality. This might still lead to a jump in exports to China, thereby leaving prices inflated for some more time. Good news is that petcoke prices have started softening we've seen maybe about 10% reduction in the prices over the last month or so. Hopefully, coal will also follow suit. On an average, UltraTech would require about 13 to 15 million tons of fuel per annum from FY24. With that kind of requirement, obviously we are planning our procurement strategies, inventory management plans, alternate fuel plans, WHRS efficiency improvement plans as best as we can to soften the impact of rising costs. I would want to clarify on the news flow around Dalla Super, the JP unit which we had acquired in 2016. It was stuck in NGT issues. It is in the last leg of forest clearances. You will recall we have held back rupees 1,000 crores from the original consideration paid in June 16. After settling all the costs pertaining to forest clearances, land acquisitions, the balance monies will be released to the sellers at the time of taking over the asset. I realize this has got delayed. It's almost been 5 years. But trust me, we are clearing all the hurdles step by step. At this point in time, I don't want to give you any timeline on final clearance because every time I have committed, I have not been able to deliver on those timelines. These things are not in our control. There are lots of government or regulatory clearances that have to be taken, but I am hopeful that we should be able to clear everything and the asset should start production before the end of this calendar. There have been several theories during the rounds on our 22.6 million ton expansion announced last month. I must tell you that it is a very well thought out planned step. It is part of the earlier announced 50 million ton growth plan. The news announcement of the 22.6 million ton expansion was perhaps delayed by a month. We were contemplating the go ahead as part of our Q4 results board meeting, but we went slow on it since there was news about wholesale assets, the transaction happening, and we were also interested in looking at those assets. Anyway, that is history now, and we have got back in our stride. The delay caused in announcing the plans will not be a bottleneck to meeting our overall timelines to commission all the projects by 25-26. Work is in full swing on the ordering process. In fact, lots of orders have already project items have already been ordered. Advance payments are being released. All these expansions are predicated on our fundamental philosophy of profitable growth. Expansions are not done just to add capacity, but to generate profits. These investments are targeting an IRR in excess of 15% as and when from 26 onwards when they start delivering production, thus helping the overall balance sheet also improve its return ratios. The internal accruals will be sufficient to meet all the capex requirements. At this juncture, my colleagues are reminding me of a unique and a creditable achievement of the company. The growth since inception have all been funded through internal accruals. Why this expansion? India will remain a strong growth market for a long time to come, and after completing this expansion, we will chart out our roadmap to rise from 153 million tons to about 200 million ton mark through organic and inorganic routes. Don't ask me questions now. It's work in progress, and we'll come back to you with details in due course of time and tell you all about it, where, when, and how. That's all from my side for this quarter results. Over to you for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pinakin Parekh from JP Morgan. Please go ahead.
Sure, sir. Three quick questions. My first is that you mentioned 153 to 200 million tons. Now, obviously, that we don't expect any details, but is this part of the 2030 timeline, or is this something which can be preponed even before 2030?
It can be preponed, but whether it is 28, 27, 28, 28, 29, somewhere around those timelines. So, because after completing our 26 the current expansion of 26, we will see how the markets are shaping up. We start preparing for that plan for 28 now, and decide on the next steps somewhere around 26.
Okay, because I'm just trying to put the numbers in context. 153 to 200 is 47 million tons, right? If you are thinking to add by 28 or 29, you would have to start, if it's a large part of it is organic, you would have to start, the process of land acquisition, mines, ordering and stuff like that.
So land acquisition is a continuous process, Pinakin, which keeps on happening, and that's why we are able to cut short the project execution time. When we announce our expansion plan, we would have completed our mines, land acquisition, environment clearances already.
Sure. My second question is, sir, on the phase 2 expansion, slide 28, which gives a breakup between integrated units, grinding units, and bulk terminals.
Yeah.
Now it mentions that bulk terminals is not additional capacity, but bulk terminals is around 2 million tons of this 22.7. So how?
No. If you sum up all these 4.4, 5.7, 5.2, and 7.3, that's 22.6. But if you look at, let's say, south, sum up all the 4 line items, it's much more.
Okay, fair enough. And can you give us lastly a breakup of this 22.6 in terms of what is the clinker capacity of this?
It's backed by full clinker. That's all I can say right now.
Okay, understood. Thank you very much, sir.
All right.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, thanks for the opportunity and congratulations on a good set of numbers, notwithstanding the cost pressures. So first question is on the cost. A bit surprised to see only a 10% sequential increase in the coal cost this quarter. So great job on the cost management. Given the inventory and the sourcing visibility we have, is it possible to give some guidance on the coming quarter? How do we see the energy cost moving and the mix of coal?
I find it very difficult. I think last quarter I gave a guidance of 10% increase, and I've barely managed to be there. Becomes very difficult to predict cost. Of course, the cost will get locked for the quarter in the next few days. But at this point, I would rather avoid doing forecasting and let me stick to the results.
Okay. But just for understanding, what sort of inventory and the lag is there in petcoke and international coal?
We have 50 plus days of inventory at the close of the quarter, close of June. And sorry, what was the next part of your question?
Yeah, 50 days, right? And it will be same?
Yeah.
And would be same for petcoke and thermal coal or something?
Fuel mix is what I'm talking about.
Okay, understood.
Because it's all our plants are multi-fuel, so we can fire anything.
Got it. Second question is more broadly on the industry supply dynamics. So, we're hearing the new entrant and also many other players might be a bit aggressive on the growth, given the balance sheet across is in good shape for the sector. So, do we see a risk of increasing supply pressures and low utilization?
No, I don't think so, Sumangal, because you will have to wait and watch for the next few quarters to see how the balance sheets shape up, given the cost pressures that are being faced. As also, even if new capacities are added, I believe that new demand will continue to surpass the new capacity addition.
Understood. And one just last thing, I mean, are there any assets which have come up, anything on the block for inorganic opportunities?
But there must be.
Okay, nothing more than that. Okay, all right. Thanks a lot, Mr. Daga, and all the best.
Thanks, Sumangal.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi. Great set of numbers. So just a few questions. Firstly, capacity, like while it will come up.
I'm losing you, Amit.
I'm sorry to interrupt. Mr. Murarka, we cannot hear you, sir.
Can you hear me now?
Yeah.
Yeah, sorry. Yeah, so on the timelines, just wanted to check by what is the phase out of this phase 2? Like, will it be all at the end of the period mentioned, or will it come during spread out during this period?
Which one? The phase 2 expansion? It will be spread out. It will not be one day. It will be spread out. It cannot be 1 quarter.
Okay. So is there any breakup as of now available, or we'll have to wait for that then?
Let project work start. Right now we are in the ordering stage because all main equipment have got ordered or will get ordered by the end of this month for all the plant locations. So in the next couple of quarters, we should start drawing timelines as well.
Okay. And what will be the revised FY23 capex number now?
I'm sorry?
The FY23 capex guidance, that must be revised now, right?
Yeah, it will go up, I think, plus minus 6,000 crores, I would say.
Right. And what would be the trade mix in the quarter?
Trade mix, 67%.
Okay, thanks. I'll come back in that. Thank you.
Blended ratio is 70%.
Okay, got it. Thank you.
Thank you. The next question is from the line of Indrajit Agarwal from CLSA. Please go ahead.
Hi, good evening. Congratulations for a great set of numbers. I have a couple of questions. First, on the expansion.
Thoda to josh mein bolo na, great set of numbers.
Sir, amazing set of numbers.
All right, go ahead.
So, the numbers, so your capex is at $75 per ton. We have seen some other players doing at a much higher number. So what do you think the replacement cost for industry now is? I understand part of your land acquisition is done, part of it is brownfield. So how do you see the replacement cost?
I would, if you have to start from scratch today and on the current prevailing prices, I would peg it anywhere between plus minus 110 to $120.
Sure, that helps. And secondly, as we are already planning for 2030, we will also have some limestone mines expiring by that period. So how are we planning for that? Any thought process, any strategy we are adopting?
So I have two mines expiring, and they will be ROFR, obviously, with the existing players. So we will secure those mines. What is required for us is to get more mines in the locations that we are blueprinting now. It's too early, but I thought the importance of tabling our growth plans 2030 was so that you are not caught by surprise later on that it was not talked about. So anyway, limestone is secured. There are two mines which expire, which we'll have ROFRs. 2030 cost of operations for every player will go up with.
I'm sorry to interrupt. We lost the line of the management. Please stay connected while we reconnect them. Ladies and gentlemen, thank you for patiently holding. The management line is reconnected back. Thank you, and over to you.
Sorry, there was a freak power failure on my handset. Asking about our preparedness. We talked about costs of a greenfield and our preparedness. So we will be prepared as and when time comes.
Sure. One last question. We generally see a bump up in demand in the pre-election year. So are you getting some kind of sense of that already, or too soon to tell?
I have reasons to believe that there are 20 months left pre-election, and there is a huge amount of tailwinds for demand.
All right. That's all from my side. Thank you so much.
Thank you.
Thank you. The next question is from the line of Prateek Kumar from Jefferies. Please go ahead.
Yeah, congrats for great results. First question is on, you have mentioned about overall utilization of 83%, and I believe your quarter-on-quarter grey realizations are up 7%. Can you split this region-wise, utilizations and realization moves?
North and Central would have gone up in double digits. West and East might be 5-6%. South was flat.
And our realizations would be like better than industry growth because a couple of peers of yours reported like 4.5% sequential growth this quarter.
My peers, okay. I don't know who my peers are, but yeah, I think we should report good numbers.
Sure. And secondly, when we say on these expansions, we have a 15% IRR post FY26, what kind of unit EBITDA we are like assuming for these expansions corresponding to the volumes already?
I think you can do your back calculation, 12,866 crores delivering a ROCE of 15% plus would generate a 1,500 or thereabout, 1,400 to 1,500 EBITDA.
Sure, sir. And last question is on...
We are looking at that number for 26. Huh?
Right. Right. And lastly, on realizations, while we had a very strong Q1, how would the exit realizations of June quarter versus average for the quarter?
June exit was slightly less, I think. Yeah, when monsoon starts kicking in, realizations start dropping. Maybe 3 to 5% lower was the exit from the chart. 3 to 5. Anything else?
So 3 to 5% versus average, that's what you said?
Yes, yes.
Sure, sir. These are my questions. Thank you.
Thank you.
Thank you. The next question is from the line of Ashish Jain from Macquarie. Please go ahead.
Hi, sir. Good evening.
Hi.
So firstly, on the on expansion. I just want to understand, like earlier when in December we had announced the expansion, we had spoken about 160 million tons by 2030, and now we have in a way raised that to 20. That's like a major increase.
Because we are seeing, we don't want to fall short of capacity, and we are seeing, I've also given a demand outlook.
Right.
So if that demand outlook is there on a CAGR, we will not have capacity to service. Okay. If we don't expand.
Sir, what headroom we have on brownfield or greenfield based upon limestone mines that we own?
I will share that offline with you.
Okay, got it. And sir, lastly on cost, I understand you don't want to give a forward number, but where would our cost be, let's say for June month or the first month of the first few weeks of July in terms of the energy cost versus what we were consuming in June on a full basis?
Daily it is going up or...
Okay, sir, let me put it like this. So,
I think let's stick to a quarter instead of the month or the day or the week.
Very volatile. Actually.
Yeah, it's very volatile.
Okay, got it. And just one housekeeping question: where are we? What is our net debt at the end of this quarter? We haven't shared it. At least
Sorry, I think there were too many slides. Net debt has gone up slightly. We are at 5561 on a consolidated basis, and India is 4670.
Okay, got it, sir. Thanks a lot. I'll come back in the queue. Thank you.
Thank you. Next question is from the line of Satyadeep Jain from Ambit Capital. Please go ahead.
Thank you for the opportunity. A couple of questions on the slide 28. Some details on the expansion in South. You're adding GU, especially some of the GU. One of the GUs is actually far from Andhra Pradesh. Are you looking to add clinker in Tamil Nadu in this one, or are the new GUs going to be served from Andhra Pradesh?
We will serve it from APCW, the IU, which is Andhra. We are also participating in auctions and mines auction in Tamil Nadu.
Okay. Because one of the GUs, Karur, is actually sort of 600 kilometers from APCW.
I know. I am fully aware, and our plan is that we'll have the bulk terminal at Bangalore. From there, it can service directly. Also, it can service.
Okay. And you're also banking on possible auction wins also to support some of the GUs?
I'm sorry, banking on?
Possible auction wins in the auctions.
Yes, certainly.
Okay. Next question, just a couple of questions on the entire CAPEX. One is somewhat surprising to see a greenfield IU in Chhattisgarh, given you already have GU clinker plants within 10-15 kilometers of that upcoming plant.
So it helps me leverage on economies of scale big time. And if you look at the next chart, which is page 29, the focus is now how we'll service the northeast market. So the extreme east plants, which is West Bengal plants, will start catering to northeast, so that capacity is available from here to service the other markets.
And moreover, Atul, if I may add, actually, the limestone is available only in the Chhattisgarh in the east, actually. So people have no choice other than to put up the clinker.
Clinkerization will be in
Chhattisgarh only. There is no limestone, Bihar, Jharkhand, Bengal, Orissa, even a very limited quantity of limestone. So Chhattisgarh is a natural choice for clinkerization units.
We have similar concentration in Satna. We have 3 units there. So it also has economies of scale.
My question was, why not do a brownfield in Hirmi?
We are just completing a brownfield in Hirmi. The clinkerization got commissioned, I think, last month, and cement will get commissioned this month or next month, perhaps.
This month itself, yeah. Beyond a limit, one should not also complicate one particular site. So if you have other options, then why not to first use those options rather than making one particular location vulnerable from multiple point of view.
Okay. Lastly, you've done in this round of expansion Kotputli, but I guess the Navalgarh land acquisition is also complete. Is that going to be part of the next phase?
So Navalgarh will form part of my next phase of growth. There are some issues on mines which we are sorting out.
On the mine, you said? Limestone mine?
On mines.
Mines and land both.
Okay. Thank you so much.
Thanks, Atul.
Thank you. The next question is from the line of Girish Chaudhary from Spark Capital. Please go ahead.
Hi, thanks. So there was this recent news flow that you bought this Russian coal at $164. So just on this, what would be the landed cost, and incrementally, how much more of this low-cost fuel can be replaced with other high-cost?
So 164 is what the cost is, and 168 if I remember it right. And we keep on scouting for opportunities. So there's nothing inside. It was opportunistic transaction. If something more surfaces, we'll pick it up.
Okay. So as of now, we have just bought this once.
157,000 tons.
Yeah. Okay. And secondly, if you can just guide us on the for the phase 2 expansion, what would be the capex to be spent over 23, 24, 25?
We have the phasing as yet. I think give me next quarter, because we are just in the ordering phase right now. So hopefully we'll give clarity on cash flows next quarter.
Sure. Thank you.
Thank you. The next question is from the line of Navin Sahdev from Edelweiss Securities. Please go ahead.
Hello.
Hi, Navin.
Yeah, good evening, sir. Thank you for the opportunity. Couple of questions. So first, I would request some more details or color about the slide 8, wherein we're talking about electrification of cement kiln heating process. So I just wanted to understand, is this can this be a big opportunity in the sense, can we really go in for instead of?
Yes, it can be. So, technical discussions have just started. It's not happening in the next couple of years. It's a long-term plan, but the emphasis is that we are making all efforts possible on reducing emissions.
The next phase of, if at all there is a next phase of evolution, this can be one of
yes,
it.
This will be a game changer.
Okay. Second, then I just wanted to request your views on the overall pricing power, in the sense that of late what we see is that despite the cost rising, we have not really been able to pass on prices commensurate to the way the cost is. Also understands government's focus on inflation. When diesel prices were reduced, there was also an industry reciprocation of passing it on to consumers. So is it safe to say that till such time the inflation stays firm, we should be more looking at cost, because prices may not really go up? Your views, please.
So, Naveen, as of now, I think we would want to balance the cost pressures with prices. And if you look at the current quarter's performance, the reported quarter's performance also, it's been all right. And I've always maintained that the price increases will always be with a lag effect. They don't happen immediately. The efforts will be at the moment to cover cost increases, cost pressures with prices.
Understood. So just one bit on the costing part, because the prices have been volatile, but of late we have also seen global prices seeing fair amount of drop. So is it be safe to comment that whatever cost of fuel that we saw in the quarter, is that very much the peak, or no, we can still see some decent increase coming into Q2?
Keeping my fingers crossed that we have passed the hump, but as of now, at least in the next 2 or 3 quarters, we would still see price increases. Cost pressures continue.
For 2-3 quarters, because as you said, in just a few weeks, we would have, in just a couple of days, maybe our cost for Q1 gets locked because of that inventory aspect.
Yeah.
So that would still be on a rising trend for at least 1 to 2 quarters.
For sure, it will be on a rising trend.
Okay, that's all I wanted to confirm. Thank you so much. But great quarter, by the way.
Thanks, Harry.
Thank you. The next question is from the line of Kamlesh Bagmar from Prabhudas Lilladher Limited. Please go ahead.
Yes. First of all, great set of numbers, and congratulations on that. So one question on the part of, let's say, phase 2 expansion. So how much is the waste heat recovery capacity included in that?
In the expansion,
Yeah,
in about 50 to 60 megawatts.
50 to 60 gigawatt. And would that be sufficient to reach our target of 45% renewable?
Yes. No. Along with that, we'll be doing solar as well.
Okay. And secondly, on part of
The important aspect to note is that we are not putting up any thermal power.
Okay, great. And sir, on the part of your existing expansion, this is phase 1.
Yeah.
So some, like say in Cuttack we have reduced, like say we have revised the capacity. So that is coming up with at like the Jharsuguda and other units. So what has been the reason behind that? Because those capacity expansions have been going for long in Cuttack, particularly in Cuttack.
So Cuttack, for example, the plan was 2 lines of 2 million tons, 2.2 million tons each. After looking at the market and opportunities available, I think the team decided that we should restrict ourselves at the moment to 2.2 million tons only at Cuttack. 2.8, sorry, 2.8.
And sir, lastly, the way phase 2 expansion is, like there is going to be a far higher level of blending ratios as compared to what we are at currently. Because like we are coming up with units in South where grinding units would be in Tamil Nadu and even in Chhattisgarh and UP. So would it be like, say, how much blending ratio or blended ratio can we assume, or clinker conversion ratio in this phase 2 expansion?
So currently we are already reaching 70%. On a consolidated basis, we might see a percentage improvement further.
Great, sir. Thanks a lot and best of luck.
Thank you.
Thank you. The next question is from the line of Rajesh Kumar Ravi from HDFC Securities. Please go ahead.
Hello.
Hi.
Yeah, hi sir. My question pertains to first on the phase 2 expansion, 23 million ton. So is it fair to assume that it would be backed with 15 odd million ton clinker capacity?
Yeah, plus or minus.
Plus or minus, okay. Second, the blended fuel cost which you mentioned, on a per kilocal for Q1, where would that stand?
Per kilocal. So we've given the fuel cost at 1,500.
2,200 per million MCV.
Per million MCV, okay. How much did you have it? 2,200.
Sorry?
2,200.
2,200 million
rupees per million kcal.
Yeah.
Okay, 2.2 rupees sort of a number you're talking, right?
Yeah.
So why I'm asking this is that given that imported coal prices are currently hovering at north of 4 rupees and even petcoke prices are 2.5 rupees after falling off recently. So is it fair to assume that we could see a sustained sharp hardening in Q2 numbers from 2.2 north of 3 rupees?
Yeah, so as I mentioned in the previous question also, costs for Q2 will go up. I don't want to give any guidance on the number, but it will go up.
No, because you already have 50 days of inventory, almost closer to that. So for most of your Q2, your cost would be secured.
Yeah, it is secured. It will go up. The reported cost will go up.
Okay. And sir, your net debt number on a Q1Q basis would have gone up by 2,000 crore?
No. We're very close. And 1,600 crores has gone up on a consolidated basis, but India has gone up by 900 crores.
Okay. And last question, is the overseas operations, if I back calculate the India operations and consolidated, the numbers look quite depressed. What would that be on account of?
So what has happened is we have operations in Sri Lanka where we had to take rupee depreciation, the currency depreciation impact of about 38 crores. Other than that, what? No. Huh? Sorry, you are asking about an operating cost, right?
At EBITDA level, the margin would be not more than 150 rupees per ton for the overseas operations.
Overall, because of Sri Lanka is what we have suffered on the P&L.
Okay, 38 odd crore for the quarter itself.
Has been provided for currency.
Okay, in the expenses only, other expenses?
Yeah.
Okay. Okay, that's all from my end, sir. Thank you all today.
Thank you.
Thank you. The next question is from the line of Ritesh Shah from Investec Capital. Please go ahead.
Take the next one, he's gone.
Hello? There is no... Yes, Ritesh Shah, can you hear me?
Yep. Sorry, I was on mute. So first, congratulations on a good set of numbers. So wanted to understand the price growth. I think it's pretty stunning if one compares it with the other listed companies which have reported so far. Anything specific that you would like to highlight? I think would love to hear your thoughts here. That's the first question.
About what? Numbers speak.
Yes, but sir, how basically was it more premium sales? I think that number is something which has been quantified. Is it direct dispatches to dealers or anything different on discounting or anything at all?
Ritesh, you look at the numbers. Let us do the business, na?
That is there.
Yeah, you enjoy the numbers. Why are you counting the goodly?
Okay. So, has there been any shift in the sales mix, basically region-wise, wherein pricing was more conducive to us, which could have helped us?
No, so I think there was a question which was asked earlier. North and Central, we were able to get better price improvement as compared to the other markets.
Okay, that's fair. So second question is, we have announced incremental phase 2 of growth capex, 22 million tons. What sort of growth optionality do we have after this?
So I think you joined in slightly late. I talked about the next phase of growth will take us to 200 million tons. Now, somebody had asked a question whether we'll do 40 million tons in 2 years. It's too early to talk about phasing of that, but that is the game plan that we have in place now going to 2030.
Okay, that's great. And so just last question, given we have outlaid our plans on the capacity side, we have also indicated capex intensity, which is great. Anything which can actually improve our positioning on the cost curve as we continue to expand? Anything from a logistics side, anything that one can look at, say, DFC, any other variables?
I think as far as DFC is concerned, UltraTech is very well positioned to take advantage. Today we run more than 260 odd railheads in the country. I think after Coal India, I think we might be having the highest number of in the private sector, railway sidings. So we will definitely get the benefit of lower cost in terms of movement through railway corridor. Economies of scale will always be a plus point for a large operation like ours, whether economies of buying, economies of logistics.
Hello.
Mr. Shah, does that answer your question?
Yes. Thank you so much. Thank you, sir.
Thanks, Ritesh.
Thank you. The next question is from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
So thanks for taking my question. Just one question. What I derive looking at your realization is that clearly the gap between trade and non-trade is much lesser in the particular.
Absolutely right. Absolutely right.
Anything structural there for us
Structural
to...
Structural efforts.
Okay. Any sense on what that gap would be right now?
$15-20.
Wow. Okay. Great. Thank you so much for that, sir.
Thank you. The next question is from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Yeah, so congrats on excellent set of numbers. It surprised the street and all the estimates. So just one question, if you can share the coal mix in the quarter, how much was pet coke, linkage coal, which normally you share in the quarter?
Just 1 second. 52% is pet coke, is what my colleagues are telling me, and no, will mix kill, 52% is pet coke and 37% is imported coal and 5% is the domestic coal.
Okay.
Balance is
I was just saying, comparing to quarter 4, the linkage coal was close to 17-18%, so it's gone down further?
Indigenous coal is more or less at the same level.
It's the same level. And sir, are you getting any imported coal under long-term contracts? Because it looks like you're saving a lot on power and fuel as compared to some peers.
Yeah. So we have, I was emphatic about our strategies on fuel management, given the quantum of fuel that we consume. So there are lots of efforts which which are put in, whether long-term contracts, whether it's sources of supplies, mix, everything goes on.
Sure. And what would be the lead distance in the quarter, sir? Average?
About
company?
430, 429 kilometers. 429.
Yeah. Okay. Thanks a lot. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you. First of all, congratulations on great set of number. Most of the questions has been answered. Couple of things. Sir, in terms of the capex, the already ongoing 19.9 MTPA. So when we announced the capex was around 6,500 crores. So has that number increased or?
No, it might increase by 100 crore here or there, but that's all.
So broadly, you mentioned 6,000 crore capex for this year, FY23. So 24, the number should be 7,000, 8,000 odd crores.
I think the ability to spend also is capability exists, but ability to spend will also be there. On the ground execution. So 6,000 plus minus should be an annual spend.
Okay. And this entire 22.6, when we say 25, but I think in your comments you mentioned maybe by FY26.
25, 26, because, as we progress, we will have more clarity on the exact dates.
Okay. And the other is the already clinker that we announced in 19.9 MTP expansion. So we have given the grinding expansion timeline, but clinker, if you can help me out of that 11.4 MTPA that was we announced previously.
The upper limit, for example, Hirmi, if you look at, the clinker has already got commissioned. Now there is Pali, which is clinker, then which is in Q3, Dhar is in Q3, others are all grinding units. It's there in the chart, page 23, Q3 23 is what the other clinkerization commissioning is.
Okay. And just the last, you mentioned that the pricing has gone down 3 to 5% in June versus the average for this quarter. Has it also further reduced the realization in the first 20 days of July?
July is always on the way the monsoons have been progressing in the country. I think July generally the prices soften a bit.
Okay. All the best. Thank you.
Thank you.
Thank you. The next question is from the line of Sanjay Gandhi from Ratnabali. Please go ahead.
Yeah, good evening, sir. Congrats on the support set of numbers. So just 1-2 questions. Like you mentioned, like the trade non-trade gap is currently 15-20 rupees per bag. So what was the thing like previous before of this improvement?
It was higher than 20.
Higher than 20. And just a long-term question, sir. Like in China, the per capita consumption is 1,500 kg per person. And
correct.
In India, we are heading to 200 kg.
So now maybe closer to 300 now. it's improved, but way behind China.
Yeah, it's the
If
one
you
peak, right?
exclude
So how
China,
long
where
things
China
have
is
been?
high on everything, if you exclude China, then the average per capita of the globe will be 500 to 600 kgs per capita.
Right, sir. So, sir, do you feel like in next 10 years' time we will be able to like touch
It's
that?
improving. So when 5 years ago it was closer to 200, now it's reaching about 290, 300, so it's improving.
Okay. Got it, sir. Sir, thank you so much, sir. Wish you all the very best, sir, for this next superb set of numbers for the coming quarters.
Thank you.
Thank you. The next question is from the line of Akshada Tellisera from SBI General Insurance. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on great quarter. So over the last decade, we did see a lot of capacities come in anticipation of demand, but the demand did not materialize enough, and therefore we kind of entered a surplus environment. Even today, a lot of capacities have been announced by you and your peers. So my question is, how do you see the large players like you and others interact with the other large players in regions like, say, North and Central? Or how do you see the small players interact with other small players in, say, South? Or how do you see the large and the small talk to each other in regions like East? So if you could just elaborate a little on that. Thank you.
First and foremost, we don't have to interact with other players, so that's the shortest answer I can give you. Unless you have something else to ask, or I didn't understand your question.
No, I was just wanting to understand how would the pricing play within the players, given that there is a demand-supply mismatch here.
So, every market, its prices are clearly driven by demand-supply. And if you are tracking the cement market for a longer history, the moment any market crosses 85% capacity utilization, there's a very strong uptick in prices. So that is how the markets behave.
But on an aggregate level, we are around 70, right? So
I'm sorry, what?
on an aggregate level, we are at around 70.
The capacity utilization at the country level, 70%, yeah.
Yeah.
But this is, again, to caution you, one should never look at all India full year capacity utilization. You will never reach a high number because cement is seasonal. July, September, and the peak summer months do pull down the cement consumption. So you will never have all India number to go by. You have to test waters for January, March. January, March, we operated last year. We operated 93% capacity utilization. We operated. In fact, for the month of March, we operated at close to 100%. And I would want you to imagine 55 physical plant locations operating at 100% capacity utilization, railway sidings operating 100%, no strikes happening anywhere, railway wagons available, everything moving smoothly. That require, if that happens, then you have 100% capacity utilization.
Okay.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity again. So, so actually on slide 30, you have mentioned about improving the blending ratio, which actually is quite an interesting comment given that you have one of the lower blending ratios actually among the players. So, how will that be achieved? Will it also mean like you will focus more on the trade markets and hence maybe lower OPC, or how do you think about that?
OPC will, if infrastructure is going up, OPC consumption will go up. Large infra projects tend to consume OPC, and that is where UltraTech stands out in supporting the infra growth, unlike any other player in the country. What we are also engaging in is advocacy with the infrastructure players to do blending and reduce OPC consumption. That is what will help us improve the overall blending ratio. Besides, there are markets, like eastern markets are composite cement markets, which the higher the sales mix in those markets or southern markets will improve the overall blending ratio.
Okay. And is there any number you have in mind, like going up to 1.4, 1.5? Is there
We're already at 1.4 today.
Okay. Yeah, you used to be slightly lower than that.
We were at 1.34 in maybe a year or 2 years ago. But we are already reaching 1.4, and obviously the ambition will be to improve it further.
Got it. Thank you. Yeah.
Thank you.
Thank you. The next question is from the line of Prateek Kumar from Jefferies. Please go ahead.
Thanks for the opportunity again, sir. Just one question, bookkeeping question on slide 13 of your presentation. There is a line item under others which says 291 crore of revenues, and corresponding that there is no volumes. We used to give this export and others volumes in this head. So firstly, why is there no volumes here? Also, this 291 crore is corresponding to what exactly?
So that others is actually an intercompany sale which we have removed from this quarter. If you add up all these numbers, which is cement, RMC, white and grey cement, it will add to the consolidated number. It was only an intercompany sale. So
volume has not been shown on that account.
And 291 crore revenue, which is on other business, UBS, BPD and others.
Yeah. So UBS sales or our building construction chemical sales or other incomes or other miscellaneous sales that might be there.
So last quarter that number was
we are trying to improve the disclosures, simplify your life. What perhaps you might want is export volumes. Export volumes were dismal. Our exports are largely to Sri Lanka, and Sri Lanka was virtually no exports. Just 1 lakh tons of export to Sri Lanka.
Sure. Okay, that clarifies. Thank you.
All right.
Thank you. The next question is from the line of Indrajit Agarwal from CLSA. Please go ahead.
Hi, sir. One follow-up bookkeeping question. Any ballpark number on how much capex is remaining in phase 1 for FY23?
We should complete everything this year, and maybe 2,000-3,000 crores of spending might be pending. If I'm wrong, then Ankit will revert to you in the future.
Sure. Thank you so much.
Thank you. The next question is from the line of Ritesh Shah from Investec Capital. Please go ahead.
Hi, sir. 2 questions. First is, Grasim has made an announcement of 2,000 crores on the B2B side online portal. We have a solid UBS franchise. Any color if both the variables can actually marry into each other for both the entities to realize the gains?
They should be. I think they will evaluate how to synergize, because that's B2B e-com. That's what I believe. Our UBS is hardcore, it's B2C. So,
sir.
Yeah, I don't have too much more insights on what Grasim is doing.
Right. Sir, any growth numbers, target numbers on UBS stores, say 3 years out, any target revenues over there?
We are today reaching about 3,000 odd stores. UBS from cement perspective, because it's an important channel partner for us, I would think 10% of revenue quantity. 1 second. Today 15%, just double check. Just today about 15% of our volumes, 15% of our cement volumes are through UBS outlets, so we will continue to grow the UBS channel.
Sure. And sir, on RMC, there are a few players who are going super aggressive in the market. Any plans over here to up the game? And
we are expanding pretty rapidly. Today we have reached, maybe a year ago or 6 quarters ago, we were static around 100 plants. Today we have reached almost 171 plants. YOY 35 plant growth has happened. So it's, if I look at the revenue numbers on that same chart, 77% growth in revenue. And mind you, these generate incremental EBITDA over the cement EBITDA. So it's not just a channel, but it generates its own P&L.
Right. So last question. I'm not sure whether should I ask or not, but I'll go ahead with it. Sir, at what point do you think that adding capacity beyond a particular point could actually be detrimental to us? What is the variable that you will look at and say, I do not want to do?
In the lighter vein, if I look right, I see my plant, and if I look left, I see my plant. Then that is when we will stop adding capacity. But to be honest, this question will get. It's a brilliant question, Ritesh. The answer to this would be defined by lead distance. How much lead I am generating? Maybe today we are at 439 kilometers. Maybe average of 300 kilometers might be a good lead to operate on. To that extent, we'll keep on expanding, because there will be opportunity to expand. Let me put it this way: there will be opportunity to expand, but there's no. This is off the cuff answer. There's no scientific work that I've done in giving this answer.
Right. Sir, if I just try to push you a little bit, we have given numbers, say 2025, probably something by 2030. Any specific numbers and market share that we would be looking at, given you would have
undefined market share, because we don't get any market data. We don't know how the capacity will be there, how the growth will be there. So it's difficult.
Okay, sure.
You ask me a difficult question, I'll give you a difficult answer.
Sure, I'll come out to meet up.
All right, yeah, that's better, Ritesh. Yeah.
Yes, thanks.
All right. Thank you.
Thank you. Ladies and gentlemen, that was the last question. On behalf of UltraTech Cement, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.